All right. Well, hey there, everybody. This is Crypto Top 10. What up? This is John once again coming at you with some of the trending articles over here in the crypto news space. A bit of a lighter episode tonight. Not too much going on other than the market is going up a little bit. How about that? We're getting some bounce back. Nowhere near what it was, but I just like seeing green and not red, quite honestly. As always, thanks to everyone who has subscribed wherever you're finding this content I'm putting out. I do really appreciate it. And there are links, or a link down in the description that you can follow. So that way you can read all these articles for yourself. I think that's kind of the most important thing. Don't just listen to what I have to say or what the other talking heads on the internet have to say. Do your own research. But hey, let's get in with article number 1. SushiSwap has officially taken the next step away with migration from UniSwap after a very interesting week. We've been talking about them on and off. They've taken the crypto space by storm. At the very least, they're what everyone is talking about. It's one of the latest decentralized finance or DeFi projects to overtake us. It's turned a major page in its short lifespan, which is only a month old. As of September the 9th, the protocol has officially completed a migration over to its own decentralized exchange platform, leaving the rest of UniSwap behind. The new SushiSwap head, Sam Bankman-Fried, laid out plans for the migration on Twitter, and he subsequently posted updates throughout the day, which included testing and specified individual token migrations. So they are finally done. SushiSwap came into existence about a week ago, just literally a little over a week ago, as a fork of UniSwap. Within a few short days of SushiSwap's launch, it already accounted for 77% of the lock value held on UniSwap. So with it formally moving away and separating from UniSwap, we could see quite a bit of value heading over there. At the very least, UniSwap has now a competitor. To say the project has received significant attention would be putting it mildly. Platform with its Sushi asset. The SushiSwap token is actually what differentiates it from UniSwap. UniSwap does not have a governance token. So that's kind of interesting. It's also had a pretty interesting amount of drama. We've talked about its former leader, Chef Nomi. He had a $27 million developer fund, which he reportedly controlled. He made off with about $12 million of it before he passed off the project to Bankman-Fried, the new head. He's the current CEO of the FTX exchange. Pretty interesting smash and grab. Though Bankman-Fried did have this to say. My sense is that they, Chef Nomi, did care about SushiSwap and wanted to do well and were working hard for it. Greed may have ultimately overtaken Nomi, however. The FTX CEO speculated, noting that he does not think SushiSwap was a premeditated scam. I don't know. Maybe it was, maybe it wasn't. Either way, Chef Nomi, whoever this person is, they're $12 million richer right now. But SushiSwap looks like it will carry on in his absence, which is good for all of us. So good to see that they're still plugging away. I do like watching the goings-on of SushiSwap. It's quite interesting. I'm very much intrigued by where it goes next in, its second week of being a thing. But hey, let's hop on over. We've got to talk about USDC coin and Algorand. So they're expanding over onto Algorand. This is because Algorand is a lot quicker than the other major blockchain that supports good old USDC. Everyone's favorite, Ethereum. It's also so that Algorand users can develop on USDC. So not too bad. For those of you who don't know, stablecoins are a huge part of the cryptocurrency economy. They're a kind of foot in the door that lets people store crypto without the risks of volatility. So you can cash out and hold on to your gains. knowing full well that you'll have that same amount once the dip is done and you can buy back in. More than $1.8 billion worth of USDC is in circulation today, with almost $1 billion minted in the past 3 months alone. So they are pretty fast growing, though we do have to state they're pretty small. I mean, I believe they're the second largest stablecoin going right now, but the first would be Tether, or USDT, which has a market cap of $14.3 billion. I have my personal hangups about Tether. There were quite a few auditing controversies back in 2017, 2018 that put a bad taste in my mouth. But it's the most popular for a reason. People like it. But the migration over to Algorand took place because Center, the consortium that produces USDC, wants to reduce the coin's reliance on Ethereum, which I think is a good thing. Especially nowadays, it's good to spread out between multiple projects. I mean, and it's probably in no small part because Ethereum is slow, wildly expensive to use, and, quote, fit to burst. Basically what they're saying there is it is a very bogged down, and it's approaching the technical limits as it exists right now. It hopes to find happiness with Algorand, which supports over 1,000 transactions per second, to Ethereum's 14, and its transaction fees are a fraction of a penny, which compare favorably to Ethereum's average transaction cost, which peaked last week at about $14 US. So it's one of those things they want to expand to let Algorand developers have better access to it, and it should increase transaction times for the rest of us. Though we gotta be clear, they're not leaving Ethereum, they're just adding to what their support is. So this is the defining milestone for frictionless mainstream payments, as well as sophisticated financial operations, said Silvio Miacali, founder of Algorand Incorporated, in a statement. This launch brings together the convenience of USDC and the advanced protocol for global financial exchange, in which Layer 1 smart contracts are as simple and secure as ordinary payments. Aw, so nice. But very good for USDC, very, very, very good for Algorand. I'm very glad that USDC is branching out. Ethereum is definitely overburdened at this point. They need to do a lot of moving. So spreading out to a new coin is a good idea. I'm very surprised they decided to go with Algorand or Algorand. Someone tell me down in the comments whether or not I'm pronouncing this right. I'm assuming I'm not. But they are definitely an interesting choice. I didn't expect them. They're a younger project. I've only just started hearing about them. But it makes sense, especially if they can deliver on this 1,000 transactions per second that they claim to. But hey, interesting. So let's hop on over. Got to touch on the good old IRS, or the Internal Revenue Service for those of us here in the States. They just spent $250,000 on a contract with Blockchain Analytics and Tax Services, LLC. Reportedly, this contract is unrelated to recent requests by the IRS for privacy coin tracking tools. And the agency recently sent out more letters to cryptocurrency holders about possible unpaid taxes. So we got a lot to break down here. As you may well know, the United States IRS's eye on cryptocurrency has grown over the last couple years, and in recent months, the government agency has spent both money on cryptocurrency tracing tools and put out a call for additional ones. And they've dropped this nearly $250,000 on a contract with a relatively unknown firm. The contract began yesterday, so September the 8th. While details are thin on the extent of the arrangement, SAM.gov, which makes federal contract details public, notes that it's for a 12-month subscription for 120 users. So that's a decent-sized department. I mean, that's a pretty large department, actually. Spread that out over 50 states. That's just over 2 people a state. So, I mean, in the grand scheme of things, it's not big. But for a developing, I struggle to describe it. Just the developing financial field that cryptocurrency is. It's its own separate thing. It's not really taxes. It's not really security. It's this new thing. So they're developing a whole new system for it. So it's going to take some time, but dear Lord, do they want to get whatever money they can. Just last week, the IRS's Criminal Investigations Unit put out a fresh call for firms to develop tracing tools for privacy-centric coins like Monero, as well as Layer 2 transaction protocols such as Bitcoin's Lightning Network. Basically, they want to be able to track it so they can tax it. Duh. Additionally, back in August, the U.S. Department of Justice announced it had seized millions of dollars worth of Bitcoin from terrorist organizations, which the IRS's CI group had aided. And they sent out another round of letters to U.S. citizens, as we talked about before. They sent out 10,000 back in 2019, so I gotta assume they sent at least that many out this year. Look, as much as all of us would love to not have to pay taxes on our crypto gains, just do it, because if you get caught, the headache, the hassle, you're going to find it's not worth it. You really are. They're going to pick through everything, and they're going to audit you for the next 7 years after it, at least. So, just pay your taxes. Unfortunately, it's what you got to do. But alright, let's hop on over to the next. So, yeah, I thought this was a pretty interesting article that Crypto Newsflash put out. And it's talking about Bitcoin adoption. So the increase of adoption amongst Bitcoin and other cryptocurrencies has been pretty significant this year. However, countries with the world's largest economies have lagged behind less developed ones. At least that's what Chainalysis is arguing based on this research they've done. The report that they put out measured commercial activity related to cryptocurrencies such as Bitcoin, but added other important figures such as the population of the country studied and the size of its economy. With this, Chainalysis tried to show how much of a national economy has moved from a legacy financial system to the crypto economy. They studied 154 countries to create its adoption rate and took the following metrics to create a scale of 0 to 1, 0 being no adoption, and 1 being very, very good adoption. Countries closer to 1, which were shown in an image below, have a higher adoption rate. Don't worry, I'll get into talking about the adoption rate here in just a second. Countries closest to 1 in ranking are pretty varied. They're split up around the globe. There's a major one and a couple big ones in Asia, good old Russia and China. United States is a pretty deep color. Ukraine is crimson. Venezuela is pretty red. It looks like South Africa's got a little bit, and a few other African countries that I don't want to try to name because I'll get it wrong and I'll embarrass myself. But the top 3 in this index, number 3rd place is Venezuela. 2nd place is Russia, with Ukraine being number 1. The United States places 6th on this list behind Kenya and China. South Africa, Nigeria, Colombia, and Vietnam round out the rest of the top 10. So even though China and the United States have significant adoption, it is the countries in a crisis that logically tend to seek alternatives to their national financial system. Venezuela is a good one for this. It's been having a lot of rough time. Ukraine's a good one. Technically, Russia is invading them right now. So that's a whole thing that we need to keep an eye on. So Venezuela is an excellent example. It's just one of those things. As everything goes on in the world, people start looking for new things to push for, to try out, to do because the old ways aren't working. And that's what's driving more and more people into cryptocurrency. So for those of us who are currently in the space, all I can say is if you can afford to invest, invest. Only safe amounts, only what you can handle. Because I promise you, 5 years' time, as long as you're investing in solid projects with real-world use cases, you'll be up. Now, again, I'm not a financial advisor, disclaimer, blah, 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 but I believe in my heart of hearts that 5 years from now, we're going to look back on the prices we see now and be like, wow, I wish I'd bought more. That's how I feel today, thinking about the price of everything back in 2013, 2014, when I first heard about it and I first made my Coinbase account. I remember buying 3.5 Bitcoin, and then I sold them when I made $500 profit on them. It helped me it bought me a brand new set of tires for my truck, which I badly needed at the time for work. But God, if I had just held on to those, 3.5 Bitcoin now, 3.5 Bitcoin back in 2017. So I do think that we'll be looking back on things again 5 years from now and going, wow, interesting. So yeah. Speaking of predicting Bitcoin's price, you just got to look at gold now, apparently. So macro scale data revealed that the correlation between gold and Bitcoin has surged in 2020, which registered its own new type of all-time high. Although both assets are in the green year to date, Bitcoin is still outperforming the precious metal, even with this recent drop. The positive correlation surged sharply at the start of July when the United States dollar started losing substantial chunks of value. As such, it appears that during these times of uncertainty for the global reserve currency, investors are turning to scarce assets such as gold and Bitcoin. These are what are commonly referred to as safe haven assets. At least gold has always been. It's one of those things people invest in it heavily in times of crisis because they consider it more stable than stocks, bonds, and then just the United States dollar as a whole, hoping that as the dollar drops, their gold goes up in value, and then you just got to try to time the bottom to switch it back. But it seems that Bitcoin is lining up with gold. I mean, it's supposed to function as on the same set of principles. It's often been called digital gold, so I can kind of see how they're actually starting to line up. Another resemblance between the two comes from their price developments during 2020. Gold and Bitcoin are among the best performing assets since the start of the year. Gold's prices jumped by 27%. Its impressive performance even led to an all-time high of nearly $2,100 per ounce in early August. It's dropped a little bit since then, but nothing too bad, just like Bitcoin. See? So that correlation, I think, is only going to continue to strengthen as more and more people, you try to categorize, something new to something old that you can compare it to, and the closest comparison I feel there is for Bitcoin is gold. Now, it's not a perfect comparison, but I can see logically how a lot of people would connect those dots and then use those dots to create in their mind how these things connect. And it's one of those things, because you believe it's connected, if enough people believe it, it kind of becomes connected. It's a weird psychic thing that humans have. As long as most of us believe something to be true, it ends up kind of becoming that way. But hey, a little touching on blockchain's demographics. So interestingly enough, now most people in their 20s and 30s now appear to be making up a majority of crypto traders worldwide. This actually is a shift away from previous numbers, which indicated not so long ago that people in their 30s and 40s made up blockchain's main demographic. Now, I can speak from my own analytics that I see most people who listen to my content are between the ages of 20 and 40. The bulk of people I see are in the 30 to 40 year old range. I don't get exact numbers, but it's kind of interesting to see that I am seeing that 30 to 40 range as the majority. Not the true majority, but the largest number of my listeners, with 20 to 30 making up the second largest chunk, but the fastest growing chunk of people who seem to be finding my content. So kind of interesting that I can kind of see the comparisons with my own analytics. In the United States, Bitflyer traders in their 20s made up 14% of all users who signed up for the exchange in the first half of 2018. However, this ratio increased to 32% in Q1 and Q2 of 2020. Bitflyer's data from the EU and Japan show similar trends, And the same survey showed about 60% of crypto users preferred Bitcoin for trading, followed by Ethereum and then XRP, but 60% of crypto users preferred Bitcoin and only 12% preferred Ethereum, further exemplifying Bitcoin's dominance. And the majority of those surveyed had long-term results in mind. They weren't just looking for the pumps and dumps and to trade and get out. They got into crypto for good future prospects, and they wanted to invest for prospects of future use, which I think is the right mindset to be in. Again, it comes back. Just wait and see where we are in 5 years. But nice little interesting thing there. And then to round thing off, let's talk about UniSwap. Over 1,000 new token pairs were added in the past week. And since the start of September, they've been averaging 150 pairs per day, which shows the popularity of the permissionless token creation that's now possible through the exchange's token factory, which is a prominent feature of its decentralized platform. Exponential growth in the number of tokens and pairs on UniSwap is a, quote, good thing, according to Jack Purdy, decentralized finance analyst at Masari, and it shows the power of a completely open and permissionless financial primitives. I'm going to say there's some issues with it. Now, without gatekeepers to approve or deny any new listings, the exchange platforms will almost inevitably support a lot of worthless tokens or outright scams purporting to be something they're not, which again is a major criticism. Demonstrating the complete permissionless of token listings on UniSwap, one user listed the UniSwap exchange token on Wednesday afternoon, a token believed to be fake and not created by the UniSwap team. That's actually why SushiSwap forked off, so they could make a token. So there is no UniSwap token, at least as of this moment, as far as I'm aware. UniSwap did not respond to the request for comment on the newly listed UniSwap token, nor to a request for a comment on the exponential growth in trading pairs listed on the exchange. However, in a blog post in late August, they did acknowledge the problem with their own permissionless system was helping to create. As the rate of token issuance accelerates, it has become increasingly difficult for users to filter out high-quality, legitimate tokens from scams, fakes, and duplicates. So, straight from the horse's mouth, people, be careful when you're using services like this. This is one of the downsides of decentralized, permissionless things, is anyone can do it, so anyone will do it. Now, centralized places have their own list of problems. It's neither is perfect. It's just positive and negatives that you have to weigh for yourself. But that'll do it for the trending articles in the crypto news space. Popping on over to CoinMarketCap. Ooh, lots of green. So nice to see. Bitcoin's up 1% 3/4. Ethereum's up 5.5%. XRP's up 2%, Chainlink's up 5.3%, Bitcoin Cash is up 1%, Polkadot at number 7 up 11.45%, Binance Coin number 8 spot up 5.4%, Litecoin's up 2.4%, and Bitcoin SV rounding out the top 10 at number up 0.11%. Not counting Tether at number 3, Crypto.com coin has the 11th spot up 2%. It honestly still looks like a bloodbath compared to where we were just a few short days ago, but it's better, and that's really all we can ask for. So that gets us to the end of things. My name is John. If you've made it to this point, why not subscribe? You get to hear me talk about things like this more often, and I so enjoy doing so. And links down in the description, so pop on down there, check it out, see what the articles were that we were talking about, read them for yourself, maybe check out some of the other articles on the fine websites that I use. They are pretty handy dandy and I enjoy their content. So with that being said, I will talk to you all soon. Bye.